Are the supply chain disruptions considered on a quarter by quarter basis if I couldn't get lumber in Q2 but could get it in Q3 and therefore completion of the job and income was delayed by a quarter? So I think the main takeaways for this question that I would have for you is, when we look back at I covered it very briefly in the presentation, but when you look back at the supply chain piece, the first thing you want to look at is, like I said, you have to qualify under the normal government restriction pieces in order for supply chain to work. So do you have a government order showing that your supplier was experiencing a restriction? Do you have the impacts on the supplier and then yourself showing that there was a 10% reduction in ability to provide goods coming from that government order? So not just general disruptions. Do you have those two pieces first? And then if you do have those two pieces and then have that for your organization as well, the last piece that you have to show is that you couldn't get those supplies anywhere on the market. So it's not just that they were more expensive or it was inefficient or whatever it was. It's like if you could have literally driven down to Home Depot or hit every Home Depot in the tri-state area to get your lumber for your job, and you could have done that and it was physically available, then this argument is not going to work for you under the rules. So it's just very unlikely that it would work for you. And I would recommend anybody who's even going to consider supply chain, whether you're an accountant or not, you should read the IRS notice that was in the slides that was them addressing the specific qualifications under supply chain, because they explain the different scenarios fairly clearly, and it's not a change in the rules. How they wrote the original rules, if you interpret it with like normal reading comprehension, that memorandum was no surprise to tax professionals who take the program seriously. So I would say check those pieces out. If for some reason you do qualify under supply chain, which is a very slim chance, but it is possible. And I would see that being more things like if you get proprietary lumber products that you cannot buy anywhere else in the market. There's only one manufacturer who is up in Washington, and I know Washington State had this. Washington State had specific restrictions on being able to supply construction materials for non-essential activities, and like residential activities had limitations on them. And if you can show that they were not allowed to sell you the goods and et cetera, that could work. And then in that event, it's only going to be for the duration of the orders, and then where you have the orders and then you have the impacts beating the test that we talk about in the presentation. So that's how you'd have to weave it all together. It's really tough to do. I've been doing a lot of this work, and I've only had 2 supply chain claims out of all of the claims that I've had. Just because it is so tough to prove it. It's so tough to coordinate with the suppliers to get the right documentation. And the second the IRS sees that in an examination, they're just going to want to shut you down because the rules are that tight. So I'd be very cautious if you're going to attempt to go for the program under that. So